Indian markets had really good 2023, and even 2024 has started on a really good note. If you look at the last 1 year, Nifty 50, the major index, has given returns of 23%, and the broader indices, the small cap, mid cap, have given returns anywhere from 50% to 70%. And more than that, the S&P BSE CPSE index, which is mainly made out of the PSU enterprises, that's given 100% return. So there is such a big divergence between different pockets in the market, but overall it was a full-blown bull market for India. Question is, what's going forward? Now definitely from any perspective, the valuations are expensive. If you look at historically the large cap valuations, the last say 10 years, the median valuation for the top 100 stocks has been around 30-31 times. Even today it's the same valuation. So the top 100 stocks are reasonably priced, but once you go down, the mid and small caps, the historical range has been in the 25 to 30 times median P multiple. Today, the same median P multiple is 35 to 40 times. So definitely expensive compared to most times in the historical time periods. Whether you look at last 10 years, 20 years, there were exceptional times like 2008 where maybe we had worse valuation than this, but today definitely valuations are stretched. And if you look at last 1 year, the returns have been high, but one needs to definitely dissect whether the returns have been high risk, high return, because sometimes a lot of high returns are confused with the risk that it entails, and when the downturn starts, such returns can completely vanish. So what do you do now? I believe that timing the market, it's not such a smart strategy, because everyone were so worried. Even 3 months back, there were many large fund houses who gave sell call from the mid and small cap spaces. But if you see the last 3 months returns for the small mid cap indices have been 25%. Those are almost 2-year returns. So sitting out of the market is extremely risky. I think it's important that you identify the right pockets in the market. Stock selection is extremely important. I think the focus has to be on how do you protect the downside. I think in a bull market you accumulate a lot of profits, you accumulate a lot of wealth, but a job of an investor is to make sure that when the bear market starts, you protect as much as possible out of that. So I think going forward, stock selection is extremely important. Your asset allocation is very important, but I don't think it's worth taking the risk of sitting out of the market. If you see, the Modi government's first term was mainly understanding the issues with the economy, fixing a lot of things. The second term was launching a lot of reforms, including the PLI, GST, and then also the tax cuts, huge tax cuts. I think the third term would be completely aggressive capex plan. The capex plan over the last couple of years have been very aggressive. I think that will continue. So we have a very good launch pad, from the lowest leverage on the corporate balance sheet to pretty good tax collection by the government fiscal is pretty good. And I think that can lead to a very aggressive capex plan by the government. And I don't know whether it's worth sitting out of such a growth period for the Indian economy as well as the Indian markets. It's important that you pick the right pockets where there is support of earnings growth, because I think earnings growth is the biggest protector of wealth in a downturn. So focus on companies and pockets which offer you the best earnings growth, but at the same time be very conservative in the valuation. I know it's very difficult, but I think investment is not easy. If you are an active investor, I think that's something that you need to make sure that you get today. And protection of wealth important. Thank you.